Hello, I'm Dr. J, and this is the Volatility Sonar Report. The reason it's so important for you is this is like a heartbeat for the market, folks. It tells you whether or not we expect the market to go up higher dramatically or down lower dramatically. As VIX moves up, they're expecting dramatic moves. As VIX moves down, that means volatility is going to be more stable. The markets are going to be more stable. Here's today's report.
Welcome, this is your Option Monster Volatility Sonar Report. From the floor of the CBOE, I'm Jamie Tyrrell with Group 1 Trading. Well, obviously the General Motors Chrysler news has really pushed the market downwards and the VIX upwards. The Obama administration appears ready to let GM and Chrysler fall into bankruptcy at the current time, and shares in GM are down very big, down about $1, pushing it into the 2s from the 3s. Now in the VIX, this has really pushed the VIX upwards. We've broken out of the low 40s range into around 45. And we talked last week about how investors were betting on tight ranges for the VIX, and today we've really seen a change and a lot of people betting on upside moves to the VIX. So the big trade today is the May 47.40 risk reversal tied to the May 30.70 strangle. Now it's a lot of strikes to grasp, but what the customer did here was bought the May 47 half call, sold the May 40 put, and then bought the May 30 put and 70 call. So it's a very bearish bet on the overall market, a very bullish bet on the VIX. They basically make money with moves above 47.5, and they double up on moves above 70. Now on the downside, they will get hurt if the VIX settles between 40 and 30, but they cap their losses after 30 by buying that 30 put. They paid $1.25 on this spread, and it will move basically with the VIX. If the VIX goes up, this spread will gain value. If the VIX goes down, the spread will lose value. We saw another similar play on the May 35.45 call spread. The customer also buying this for an average price of about $5.50. So last 2 weeks we've been seeing a lot of butterflies, a lot of condors, a lot of people betting on tight ranges. These were more protectionary plays, more plays on worrying about that upside in the VIX once again. So one big sell-off and we get these customers back into the pit, back playing the upside call spreads, playing the complicated four-way spreads that benefit from big moves in the VIX to the upside. That's what we're seeing here. This is Jamie Tyrrell, Group 1 with Option Monster.